Good afternoon, traders. This is Christian from Market Trade Group, and this is your end of day market video for Friday the 14th. It's also the end of week video too, which I'll be going through some weekly performance. I'll be going through some weekly charts. Always interesting, I think, once we get to the end of the week to see, how things ended up in terms of, looking at the weekly chart for the indices and some single stock names. Again, kind of looking at a bigger picture, I think really helps a bit. First things first. If you are not a member of Tribeca Trade Group, take a look at our site, of course, and some of the products that we offer. We really go through a disciplined approach. I'll talk about our trade in one of the trades that I have on ON. What I try to teach traders is basically just that. I try to provide a detailed approach. Once I just have to pause this video. All right, so yeah, go ahead and check out our website. Obviously, what I also do is I provide transparency completely on what I'm doing, how I'm faring for the month to members, and I provide updates as we go along through the month, and then of course provide P&L videos and go through the review step and so forth. So you can find out about some of our products in here, but you'll see. If you're a regular viewer of my videos, you know that I go through the technicals and a little bit about how I trade. So I provide more context. We did today, for example, we do Q&A sessions on Friday, and some great questions by members. And we went through, it was like an hour and 10 minutes today, talking about a little bit about day trading, a little bit about swing trading, and just a little bit. We were talking a lot about the Darvis book today, which I really like, and kind of is very close to like what we do in terms of looking at breaks out of a range and using the market web's value areas. So here's where you sign up to be a member, TribecaTradeGroup.com, and you can find more in the product section. Risk disclaimer in front of you: everything that we're going through is for information purposes only, not giving out any advice or recommendations. So geez, what a way to end the week. Pretty bumpy day, a lot of events. So I think like that was one of the drivers of today, is we had a couple different groups of economics that came out today, different reactions to them. We had the import price retail sales, which the headline number looked like it was a miss. Then if you look at the control number, which was actually a beat. And from that point on, you saw the US dollar get stronger. And that was a theme today. I want to show that chart in just a second because I think it's pretty quick. I think it's pretty interesting. But just to finish the thought here, then you had the universe. So the market started to kind of, was able to kind of handle that, along with the industrial production number that came in a little bit hotter than expected. And then we got to 10 o'clock, and the University of Sentiment numbers were higher than expected. So again, it's a little bit different because we've been seeing some softer economics, and depending on how you interpreted that, retail sales may have been a little bit better than expected. Plus the industrial production was higher, right? And then really interesting, and remember these are survey numbers. Someone asked me, is there something wrong with this data point? The 1-year inflation ticked up to 4.6. You have to remember it is a survey, and I don't know exactly what the questions are in the survey, but whatever reason people wanted to imply or thinking a higher one year inflation rate, and the market kind of hiccuped on that, and brought some volatility in there midday. However, one thing to note, and this is kind of what we've been seeing, is that this market, every time it dips, it's short-lived, and buyers are coming back. So you got two things going on, right? One is that when this market tries to break higher out of the range, it's getting rejected. And when the market is going, seems to be turning lower, it's getting rejected there too. So there was a great comment, I think it was by Matt Caruso on Twitter, saying, and I echo this, I've said this a couple times in the last couple of weeks, that if you're a perma bull or if you're a perma bear, that hasn't worked out too well in the last couple of weeks, because we've really been trading in a range so far in April. Again, for the year, we've made some gains, but for the last couple of weeks, you really have to be patient and not get over the tips of your skis in terms of risk. So I mentioned I would bring up, and I'll start kind of doing this with, but I've got a couple interesting things to kind of talk about as we close out the week. I want to talk about NVIDIA, how that's become such a battleground stock. So I'll go over that as well. But here's the dollar, and this is the UUP ETF. It sank for a few days this week, like pretty decently, but it took out one of these virgin point of controls, and here you see a reversal off of it. So this was grinding higher all day until about, let's see, what time did it start to taper off? I think right around like 1 o'clock. And once the dollar started to kind of, it was just grinding and grinding all, throughout the trading session till 1 o'clock. Once it kind of alleviated, same thing with interest rates. They were going higher today too, when you look on the 30-year. And once they kind of paused, the market was able to kind of get a footing and rebound. So there's not much to really go on here in the US dollar. Even though it reversed and went higher today, I don't think it changes really the trend. And I don't think there's anything majorly to worry about here for the time being. If we get back above 27.92, then there's something to worry about. But for now, while we're below value for the month, of course, there's going to be up days and there's going to be down days. We might as well talk about overall bonds too. They did go lower for the week. TLT was down 3% for the week. So we're back to this 200-day moving average. My thought, I always share my thoughts in these videos, is that this could go back and forth sideways. I don't think that's going to matter too much. If we really start to kind of break down again, then you have to, or at least I will be more concerned if interest rates start picking up some momentum to the upside, and hence prices would go down, right, on these charts, because we're looking at the price of bonds. Remember, with the price of bonds, there's an inversion with the interest rates. When prices go down, that means yields are going up. Here's what, if I could, why is this not coming up? Here we go. Here's what the move index to, which is treasury volatility. I've made reference to this over the last couple of weeks, that basically that all this volatility that people were getting really worried about in treasuries has come off pretty decently. I haven't tweeted this out in about a week or so, because I just thought that it was headed towards this direction. Funny that you see all these bad, and I'm not going to call anybody out, but for as much as Twitter is good, and I mention Twitter quite a lot in these videos because it's very good, because first of all, there's a lot of really good follows on Twitter who are putting out free trade ideas, right? That is great. There's also, you could use it as sentiment, right? When everybody's super bullish or bearish, right? You could use that you could use Twitter or FinTwit as a sentiment gauge. But there's also a lot of really bad analysis too. I was seeing this comparison for a while where people were noting that the treasury volatility was going up, and they were comparing that with the VIX. And they're like, well, that means the VIX has to go higher. No, that's bad analysis. Volatility in treasuries is very different than volatility in equities. You can't make these apples to oranges comparison and think that you've come up and figured something out. So I never call anybody out on Twitter, because that's not a nice thing to do. But I do mention when I see really bad analysis. And it's funny, because when people put out these types of comparisons and they say, oh, geez, look at the volatility in treasuries and look at how low the volatility is in the VIX. That means the VIX should be volatility should be creeping back into equities. That never happened. So, what people should do when they tweet these things out is say, hey, maybe I shouldn't have implied that. And which brings me to the next, not comparison, but next topic is, look at where the VIX closed today, right? I got some questions about this today. Why is the VIX closing at a 17? People really read into the VIX because it's called the fear, it's called the fear index. But you have to remember what the VIX measures. It only measures one thing. It doesn't do any of that psychological stuff that people read into the VIX and think that it does. All it measures is the short-term implied volatility of S&P 30-day options. So let's take that another level, right? So we'll bring up the S&P chart, right? So as we see this VIX coming down, and we'll go over the weekly chart in just a second. But look at what the S&P has done over the last couple of weeks, right? And specifically in April, right? It hasn't gone anywhere in April. Yes, there's been some intraday moves, but overall, it's not moving very fast, right? We're not getting these big, look at the prior chart, right? Is this moving as fast as it was a couple months ago? No, it's not. So, and it's moving, it's in a tight range. So yes, volatility comes down when price is not moving that fast. And again, so far we're looking a little bit different than what we did in here, right? I talked about, if you watched yesterday's video, we talked about how, I said yesterday that one day, of course, is not a trend, but you have to honor that price is trying to stay above the 5-day moving average, right? I spent some time talking about once price gets above or below a value area, how I really rely on the moving averages, one of which is the 5-day moving average. And it really kind of gives me a sense of price can stay above. That means that we're trending higher, even though we really didn't do much today other than explore some ranges. We are still staying above the 5-period moving average. So we'll see how this kind of shakes out next week. We're going to get a big week of earnings. In fact, the next 2 weeks are going to be very interesting in terms of what kind of earnings that we're going to get. So I mentioned I would bring up the weekly chart. We're still sideways, guys. Until we break 42.57, we are inside this value area for the year using volume at price, which is based on all of last year's price and volume. If we get above there, then it's a different story. How about the Qs? They're not there yet either, right? In fact, the Qs were basically sideways this week. I think they were up 20 basis points. However, we're exploring some ranges here, right? Clearly, we try to go higher. It's not happening right now, right? We also try to go lower. That support held, right? So you might think that that's actually a bullish thing. I would agree with you for now. For now, we're holding support. We're also not by a large margin, but we are holding above the 5-day moving average. Nothing wrong with consolidation. Remember, the Qs are up 20% year to date. There's nothing wrong with consolidation here. You just really have to be patient and not get overexposed. All right. We talked about this a little bit too. I try to share some tidbits that I share with members in the trading room. One of which that I talked about with this whipsaw price action is what's been working for me is scaling into positions rather than taking, trying to take a big swing at something, and just at one try, right? Being that this market, you may, like, for example, in the first 15 minutes of today, right, the market was going higher. If you bought a couple things and they were up 1%, 2 hours later, they're down 1%. So if you leave yourself that dry powder and the ability to add several times to a position, you might improve your overall cost basis quite a bit. The other thing too is what helps too with this market gyrating around in the middle of the day, lowering your quantity of positions, right? If you're getting whipsawed around quite a bit, right? The one thing that you could do to kind of improve your situation, well, there's a few things you could do. You could reduce your position size too, but you could also reduce your quantity of positions. That was one of the things that I talked about quite a bit last month when we were chopping around. I only had a few positions on. And then once the market started to kind of gear up like it did last month, coming out of this, right in here, right, I was able to kind of counter really quickly and add risk and take advantage of the situation. But again, I held really thin positions. Now I'm actually holding a little bit more positions than I was here because the price action is acting a little bit better, right? And then lastly, this is a tough one. IWM keeps coming to this 178.86 level, not ready to do it. A lot of reversals. JP Morgan was not one of them, but a lot of whipsaw kind of crazy action in some of the banks that reported earnings. Really interesting. Some of them seem to report pretty good numbers. But remember, with a lot of earnings reports, it's not so much what happened in the past and what they're telling you they did in the past, but what the future prospects are. That's a very important concept when we're going to get into more of the heart of earnings season, right? Newer traders get fooled by this all the time. They're like, geez, why is the stock down? They reported great numbers because that's already happened. That's gone. price action looks forward, right? And looks at, it's, really cues in on what happens during the conference call, right? Whether they're really bullish about their prospects going forward, or if they're skittish and they're worried about, that will dictate price going forward. Not so much what they reported in their numbers from a quarter ago. So, keep that in mind with some of these banks that reversed today. 178.86 is the level that price is going to need to regain. Also, if you look on the weekly chart, we're still in value. We did bounce off that bottom of value, but we haven't really gone too far, as I mentioned on the daily chart. What about micro caps? That's something too that I think makes sense to keep an eye on. And I think basically on the weekly chart, if I can get the weekly chart up here for IWC, you'll kind of see what I'm referring to. We're right at this bottom of value. So again, we talk about a lot in these videos because people like to classify a market, whether it's in a bull market or bear market. There's some stocks that are in bear markets. There's some stocks that are in a bull market right now. You've got stocks all over the place. And in this case, IWC, the microcaps, this kind of looks like a bear market to me, right? It's clinging to this bottom of value for now. All right. What about commodities? We talked about crude quite a bit. Very close. It did close inside the value area, but not by a lot. Keep that $82. Also, just energy stocks, they did okay this week, but they weren't super, super strong, even though the price action, resolved higher this week in energy. Could also have to do with nat gas, which was up, I think, what, 5% for the, or no, sorry, I'm looking at the wrong thing here, but green candle, even though this VPOC is still lingering. Last commodity that I'll look at is probably gold. Look at the weekly candle for gold, flat after selling off today. So kind of interesting. I actually got hurt by this a little bit today. I'm holding a couple of gold miners, and I wasn't expecting such a big move down, and I got stopped out of one of my positions. So yes, I talk about, get used to this. If you're going to be a member of Tribeca Trade Group, I don't just talk about winners. I talk about the losers too, because we all have them, right? And how you manage the losers will make or break your year. Again, I'll say this again. Everybody has losers. How you manage the losers will dictate your year. If you get rid of your losers quickly, right, and don't let them be a major problem, you can move on and go on to bigger and better things, right? Stocks that are acting better than trying to manage a loser or hanging on to it too long because you're afraid to admit a loss. The more time that the quicker that you can get over your ego about that you have a loser and get over being stubborn, the better you're going to do at trading, in my opinion. All right, so that was kind of the movers for the day. I'm going to go over some single stocks too, but here's how the performance was for the day. So we covered some weekly charts. We covered the dollar. We covered the VIX at the lows, as well as the volatility of treasuries. We also covered a lot of the data. Let's just quickly go to the weekly performance, right? Some of which we've talked about. It was actually a week where small caps outperformed, even though they didn't break that level that I was referring to. Qs were essentially flat for the week. Bonds were down. In terms of best sectors, I mean, what a week for Bitcoin and blockchain stocks. Bitcoin, I think, reversed today. Well, it actually finished up for the day, but obviously a big week. Here's what the Bitcoin chart looks like. Here's what the Ethereum chart, which I don't have this in my spreadsheet, but or in my Word document either. But that was a big week for Ethereum, still in value for the year. And other sectors that did pretty well. I mean, just kind of crazy that the home builders continue to move forward. ITB, this is, believe it or not, right? We talked about with some stocks in a bull market, some stocks in a bear market. The housing stocks remain in a bull market. Unbelievable how well these things have done, and an environment with increasing interest rates. I have to say this looks pretty good. I was looking at Toll Brothers. don't have it on, didn't trade it, but this looks pretty good. And some of the flooring names look good too. And if you go through a couple of those names, which I'm not going to go through in this video, but you know, churned out another week of up 3.6%, even with rising interest rates this week. Just incredible, right? And it just shows you the demand that's out there. I was out to dinner earlier this week, and I bumped into an old real estate agent that I used to deal with. He was telling me that the demand, and again, I'm in the New York City area, but he was saying that the demand is unbelievable for some types of properties, and it's a head scratcher. And it's like, really? I said, with these interest rates. And he said, yes, prices are still going up and there's still buyers. So you could argue with some of this stuff, and you can make an argument, I guess, that's maybe it's temporary or whatever. But I said this earlier on Twitter. People have been predicting, it's been over a year now, probably almost a year and a half, where people have been trying to predict a recession every month. It's going to be next month. It's going to be next month, right? We've been hearing that for over a year. You know, it's impossible to predict a recession at this point, because I don't do it, but people do it every single month. Now, eventually, someone's going to be right, because we do operate in cycles, right? I mean, we know that. And, you know, just like with bull markets end, bear markets end. Same thing with expansions and recessions too. But just the fact that, you know, every month, you know, if you turn on, you know, financial media, someone will come on. Oh, we're going to get a recession next month. It's like, really? You're really going to just continue to make these predictions about this stuff, even though, and again, some of these people they come out every single month, the same person who says that there's going to be a recession the next month. It's quite unbelievable, but this is what we have to deal with as market participants. Solar stocks were up 3.6%. You know, energy stocks did do pretty well. XOP was up 3.2%. XLE was up 2.6. I guess I was just expecting them to be up a little bit more with the move in oil. Chinese internet names, they were down 5% for the week. REITs and utilities, some of the defensive areas, telecom in there too, they were lagging for the week. Semis did not really participate in the week. They were flat for the week. Once again, they've been in consolidation mode. Where's my IBB? Where's my biotechs? For some reason, I thought they had a better week, but I don't see this on the leaderboard. So perhaps XLV was only up about 80 basis points. So maybe they were kind of in the middle, even though they had that big day yesterday. All right. And then here's your international performers. Congrats if you were all in Nigeria. NGE, that was up 14% for the week. Wow, what a mover. All right, so I mentioned I would go over a couple single stocks to kind of close out the week. So let me get to, like, you know, again, I find markets very interesting, right? So I'm not in my trading account, right? I've talked a few times about NVIDIA over the last few weeks. Ultimately, like, my price target is $300. However, I've gone in and out of a position, you know, out of a swing trade in my trading account. I don't have any position on right now in my trading account. I'm going to wait until this gets back above the 5-period moving average. It's very close to either breaking down or breaking up. So overall, like, I have more of a bullish stance in NVIDIA. But if the technicals are not going to agree, I'm not going to be in the trade, which is why I took off a trade earlier this week. And we'll see what happens at this 262 support. If it starts to gear back up again, I'll get right back into this name, you know, like, no problem. But what I think is really interesting, and again, I like to joke around, because you have to a little bit in trading, because some days are very dry, and sometimes you know, days are a little bit boring. But I find what's very interesting is so many people are negative because of the valuation in this stock. So I thought I would just kind of entertain this a little bit. So you may be right that NVIDIA is, like, if you're on the bearish side of NVIDIA, that the valuation is high. But that's been the case all along with NVIDIA. It's always been a high valuation name. Now, another argument that I've heard recently with this, because again, I like to kind of go through point and counterpoint, even though I am more bullish NVIDIA than anything else. But someone else was telling you, well, geez, you know, the stock has gone from 120 to 260. Well, that shouldn't be. That's no reason to short. So let me tell you things that I've learned over time. Just because a stock goes up and you think it's unbelievable, that's not a reason to short the name. That's just not how it works, right? Just because a name goes up and you think it's up so much in a tough market that's a reason to short it. That's it's like the commercial, the Geico commercial. That's not how any of this works. That's not how trading works, guys. So the other thing, if you could make the same thing. So someone said to me, and again, I'm not picking on anybody because I've heard this argument several times now on Nvidia that, oh my God, it's up so much this year. It shouldn't be up that much. That is not an argument to go long a stock or to short a stock. It's where the stock is going to go from here, not what it's done. You could make the same argument too. You could come around with a bullish argument and say, hey, this stock was at 340 at one point and it's trading at 267, right? It should be higher. So that doesn't make sense either. Right? You can't go back and say this is where the stock was trading and it should go back to this price. That is completely and I'm sorry if I'm offending anybody, but that is some of the worst analysis that you could possibly do, to say that this is where the stock was and that's where it should go back to. Now, also everything changes. This stock, and again, this is where it's the bullish side, but you know, AI right now is a huge theme. Whether or not you know, you agree with that or not in terms of like being bullish or bearish AI, because that's very battleground as well, right? You know that they're going to be involved as all these companies want to get more into artificial intelligence. This is the company that powers it. So you're really going against the grain in terms of what the trend is right now. And I just don't think that that's a very smart thing to do. Somebody else, you know, so going back to the valuation thing, somebody said to me, well, it's such a high valuation. So don't you think of all these companies that are going to be using their chips? Don't you think they're going to be generating a higher revenue because of that? And once they report their next quarter, if you don't think that that's going to be a positive catalyst, if you're just relying on saying, oh, the stock was at 140 a couple months ago, so it shouldn't be up here, I think you need to kind of do some examination. And it goes back to, I like this movie, American Hustle, but really that's what you're going to go with, as Christian Bale says in this movie. I don't think that's the smartest analysis. So again, I'm not saying that it's going to push higher. I just thought it would be entertaining to kind of go over this. For now, if it stays above 262, and if it gets back above the 5-day moving average, yes, I'm going long with a price target of 300. If it breaks 260, then the bears are onto something, right? And I won't be long the name. I'm not going to short the name either, because why would I short something that has such a catalyst right now? That is such a difficult trade. But anyway, I'll move on. Let me talk about it. But I hope I'm entertaining you. I hope nobody's getting offended by this. That's why it's called the market. Right? It's a market of different opinions, right? And that's what you have to know, right? People are bullish, people are bearish. It is a market with different views. All right. Palo Alto had a nice day today. I don't want to see it make a double top here, but it had a real nice recovery from the lows. I'm looking for 204. I did take another target in this trade today. Just a few other trades that I wanted to go over too. Google, I thought, had a really good day. Right. And this also looks like I do like this setup. It got above the value area about a week ago, broke back in, now broke back. I'm looking for a target up to, you know, but about $5 away, 113 and maybe even 116. Remember, a lot of names like to rally into earnings. I talk about this all the time, and it's an important concept to go through now. Look at what UNH did. So if you think that you're going to outsmart people and think you're going to go long or short for earnings, it's kind of a toss-up. There is a little bit of an edge with some companies that do have a history of doing really well on earnings, but overall it's a toss-up on what the company is going to do. This is a much better play, in my opinion. You trade the name into the earnings and then you take it off on earnings. UNH made this really nice move, took out this upside target, and that was it for the name. Right? Forget about what the name did on earnings. This is where you make your money, on the run into the earnings. For a lot of cases, not all cases, but it's an easier trade. Is it as fun as betting on what happens on earnings? It's not as fun as betting on baseball and whether Tampa Bay is going to win their 14th game in a row. I get it. That's fun betting on these things, but not on like it's not good trading in my opinion, to overlook that a name could run into earnings. So yes, I think that this name, sometimes this name likes to run into earnings. So I did put on a starter position at the end of the day, looking for a move into earnings. Again, have to kind of think about things one step ahead. Other names really quickly. I mentioned, again, sorry for the longer video, but it's Friday and I thought that this was really interesting. This is a name that I've been positioning in, right? ONON. I'll spend a minute or two here, but ultimately I think the trend is very strong in foot companies. If you don't believe me, you could go through Crocs, right, which had a nice day today, is moving out of this. I've talked about this chart a couple of times, how I didn't think that this was a head and shoulders. I thought it would resolve higher. Guess what? It's resolving higher. Deckers. Deckers does some other things too, but Deckers is at the highs. What about Nike? This name also, it's not blasting off, but it's above all that, it's trending higher. Even Skechers, SKX is doing really well. So do you kind of like see that there's a trend going on here, right? This group is very strong. I want to stick with strong names. However, this name had really good earnings and it may consolidate a long time. Let's look at the weekly chart. And I'm not going to give you this answer. You have to think about it for yourself. Would you buy or sell this chart? Maybe I will give you the answer in a minute, but why can I? So it's not letting me, I guess, let's see if I can zoom in here. Yeah, so this is the base, right? Break out of the 2023 value area and it's consolidating, right? Ultimately, I am long the name, so I like the digestion here. I think that this is healthy after a big move. Now, my ultimate target is 36.50, but I don't think it gets there in a straight line. And there's always uncertainty. There's no sure things in trading. Sorry. So you have to have a trading plan. My plan is I will be long this unless it breaks its 20-day moving average. If the 20-period moving averages kind of catches up to the price action and starts to go here, even better. So my ultimate target is up there, right? 36, maybe even 37. And I will take profit targets along the way and I will add into weakness. Like today, what I did is I took a target right at 31.80, right? So again, planning out your trades. You could see, for example, right here was, I had a target out there earlier in the day. I took one more target at 32, right? Which was actually a little bit above the value area. So again, not being greedy in this market. It's not a market, right, to be super, super greedy, right? You take a target, a lot of times you could add it right back, which is what I actually did today. So added that back. Remember, I'm not one of these guys who are going to try to pump a stock on Twitter, right? I saw someone else do that. And that's great. Like that's, I guess, what their followers like them to do, right? I want to know where to be taking my money off the table, taking a target or two, and then, ultimately still having that price target up there, which is, I think, and I tweeted this out, this setup back on April 3rd, I believe, but you could check my Twitter feed for this. So yeah, I mean, have some patience, right? Ultimately, I think the stock moves higher, but there's no guarantees. And if it breaks the 20-day, I'll be out of it. When it rips, I'll take some profits and leave the rest to try to get that $36 or $37 price target. All right, I'm going to wrap it up here because I think the video is long enough for the weekend. Guys, have a great weekend. Don't forget to check out tribecatradegroup.com, and I hope to see you in the trading room. Have a great weekend.